I want to revisit what's going on with shares of IBM right now, because they're actually a little bit higher after hours. They came out after pre-announcing those results last week, Anurag. They came out today cutting their full year sales outlook, which was broadly expected. But when you take a look at this share reaction and what we learned today relative to what we heard last week, what do you make of it? Why do you think shares are higher right now?
So if you look at it, the revenue came in the second quarter about 1% or so. And what they're saying is for the full year, they are looking at 4 to 5%. So, you could expect some improvement. And one of the things we talked about even last time when they reported was some of the funding changes is because of people buying more hardware and servers at the expense of some of IBM's software. And one of that software units is the transaction processing segment, which was down 9%. Now you buy this software in conjunction with the IBM mainframe that you bought, a few quarters ago. So what is most likely what we're going to hear on the call is that customers who have delayed those purchases will come back and buy it either in the third quarter or the fourth quarter. And I think that could be one reason why the stock is bouncing a little bit up.
There were two areas of concern. Obviously, the idea that some of these big customers were actually delaying or putting off their orders. But there's also this idea that some of the existing customers are basically trying to find, using their own AI tools and technology tools to find ways to replicate or, if not completely displace their need for IBM, their need for ServiceNow, their need for Salesforce, et cetera. Is that a little bit overblown, Anurag, at least in terms of your own analysis and what you're hearing?
Yeah, well, at least for this quarter is massively overblown because that's really not the case of the reason why they are missing. The shifting in funding or the IT funding is what's happening. Now, if they are able to replace IBM or other software packages 3 years from now, it's a completely different story, but that's not what's happening right now. We are merely seeing companies buying AI-related products, not AI-related products, but let's say servers and storage devices, which are going to go up in prices because of higher memory costs down the road at the expense of consulting and traditional software.
And another detail from this IBM report that is interesting is that the company is saying it will accelerate cost-saving initiatives. It continues to expect an additional $1 billion in free cash flow this year. That had been one of the points that was raised since last week, Anurag, that maybe IBM could be doing more when it comes to cost cutting. The plans that they've laid out so far, do you think that they go far enough?
See, that's been the case with IBM for several years. And one of the ways they do that is you right-size the organization, especially on the consulting side, where the bigger manpower is, and you move a lot of that work offshore. Because when you look at low-cost regions, companies or the clients right now are looking more for cost-cutting initiatives or cost savings initiative. And one way to do that is to do it from low-cost countries. And IBM Consulting is a very big, you could say, segment within the entire consulting framework. And I think that's a little bit of what's happening over there as well.